In the first 4 months of 2014, Hong Kong exports edged up 0.1% from the same period last year. Well, that figure, however, is expected to grow to 4.5% by the end of the year. Well, to discuss this, we have Daniel Poon, Principal Economist in charge of Global Research with the Hong Kong Trade Development Council. Daniel, can business people expect this growth to translate into a rebound for the rest of the year?
Actually, the performance of Hong Kong export in the first 4 months of this year was below our expectations. On one hand, while the EU and Japan has continued to recover, the US economy contracted quite significantly in the first quarter, due mainly to the severe weather conditions there. And on the other hand, the Chinese economy also slowed down quite significantly as the year opened. Not only Hong Kong's exports have been affected, but the exports of other neighboring Asian countries have also been affected. We are going to revise downward our export forecast. Right now, we expect our export grow by just 4.5% for the whole of this year, compared with our previous forecast of 5.5%. But with the fading out of the adverse impact of the severe weather conditions, the US economy is showing some signs of a recovery. We would expect the sentiment for imports will strengthen again. In the meantime, we also expect the EU economy as well as the Japanese economy will continue to recover. The Chinese authorities have introduced some sorts of stimulus measures, especially targeting the rural economy as well as the small businesses. So that's why we would expect our export would improve quite significantly in the rest of this year.
Now, despite the positive drivers from some of these traditional markets, there are some warning signals as well. Japan, for example, has raised the consumption tax in April from 5 to 8%. There's also discussion about a rate cut in Europe. What can we expect from some of these traditional markets to, I guess, counter some of these influences?
Under economics, the Japanese yen will continue to be weak, and this will boost Japanese exports. As a result of better exports, we will see business investment will improve, and they will also hire more employees, and this will lead to a better job market and a better consumer sentiment. As for the EU, the inflationary pressures are rising in the EU, but then the ECB is able to target this problem specifically by introducing some very ultra-loose monetary policy. So we will see the Eurozone economy will continue to pick up, though at a gradual pace.
What should manufacturers be aware of looking forward?
We would expect our electronics export will continue to improve, in particular because of the strong demand for some electronic gadgets. We will see that the demand for the smartphones as well as tablets will continue to strengthen. And with this increase in demand, we will also see a spillover effect into other related products, especially LED lighting as well as some green lighting.
Now, exports, however, of clothing and jewelry showed signs of a decline in the first 4 months of 2014. What can we expect for those sectors?
In the US and in Europe, the strengthening demand for luxury products will bode well for the demand for jewelry. But on the other hand, the fluctuating raw material prices, particularly for precious metals like gold, would be great challenges for Hong Kong exporters. The demand for some higher value fashionable products will strengthen, but because of the fact that consumer will still be conservative, so they are looking for products that provide better value for money and which serve their needs. On the supply side, Hong Kong exporter, however, will see increasing challenges from some neighboring producers such as Bangladesh, Indonesia, Vietnam, Cambodia, and Myanmar, in particular because of the rising production costs in the PRD.
Thank you, Daniel. Daniel Poon, Principal Economist with the Hong Kong Trade Development Council, and you can find more from Daniel and his colleagues at www.hktdc.com. hktdc.com/research. Thank you.